You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time for Episode Dose, the Thursday edition of the bi-weekly Options Odyssey. That is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you are just binging yourselves. Hey, you know what? We've got the content for you, so have at it. It goes back 14 years. You could really mainline the content spigot if you want. The best way to do that, of course, is our website or our app that gives you unrestricted, unfettered access to pretty much everything going back to the launch days of Jan 2007. You want to go back and talk early days of the penny pilot? You can do that. January 2007. That's how long we've been doing this here options radio thing. And of course, if you like what you hear, this show, anything on the network, make sure you keep rating and reviewing. More important than ever these days, so many new folks discovering the world of options, the world of volatility, and indeed the network. So let's keep that flow going wherever you like it. Again, if you like it, hopefully you do. Rate and review. Keep that love coming. Keep those questions coming too. It is, of course, Mail Block Thursday. So we'll see how many we can get. We've already got some epic treatises in, so be prepared for those. And let's see who we're going to hear from today on the show. First off, let's go back out to the dark, the stormy, never sun-shining and warm and happy place known as the shores of Maine, where we are drawn once again to the imposing GIOVINAZZI Castle on the Hill, where we are joined by the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Lion Capital, by way of some Robin Hood thing, by way of Option Pit, by way of some Riot blockchain stock near you. Mr. Rock Lobster, welcome back to the program, sir.
Just scalping Riot like a goofy fool. I have to say it's not stormy, and it is cold, but it's cold and sunny and snowy here in lovely Maine. But we'll talk about Riot and the crazy blockchain later.
All right, we'll get to all the crazy later. Speaking of crazy, He's not crazy, but let's bring him on anyway. He is Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well, sir.
Always happy to be here and being introduced that I'm not crazy. I love it.
There you go. Your compliance will be happy as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show we break down what the heck is trading, what is lighting up the markets out there. And it seems like the worm may be turning a little bit as we kick off the show. Earlier in the session today, things were kind of mixed. We had a little bit of green, a little bit of red on the screen. It seemed like there was no real direction to anything. And now kicking off the show time, pretty much all the major indices have ticked into the red, if some of them ever so slightly. NASDAQ pretty much a little bit south of unched there. The S&P, the Goldilocks, off nearly 0.25%. The Dow closing in on 0.5% in the red. So maybe some folks starting to get spooked out there either way. More sellers than buyers today. You know my thoughts on all of this out there. And coming into the vol landscape here, vol ticking up, obviously, from our last show. So much for the great fade everyone was speculating about going into settlement on Wednesday in VIX land and everything else. Once again, Mr. Rock Lobster VIX has stymied you by bouncing hard off the 21 strike. Coming in to showtime now, we're at about 23 in VIX cash. That puts it up over a point, about 1 1/3 handles from our last show. Some folks were thinking maybe we'd get that sub 20, the teens VIX, dare I say it, a teen handle in the VIX. Not so much this week, listeners. VVIX also ticking up as well, up to about 118, puts it up about 8 points from our Monday episode. VXX, a product you guys like to fade, not giving you any fade love this week, closing in on that 17 handle, puts it up almost 0.5 point from our last show. And VolQ, aka the at the money vol of the NASDAQ 100, at almost 23, about 22 3/4, puts it up a full point from last show. So a little bit of, shall we say, ticking up, ratcheting up over there on the vol space, and a little bit of perhaps the worm turning a bit. But again, the worm's got to turn a whole hell of a lot in the broad market before it makes a dent in any of these, shall we say, lofty indices going on out there. Of course, some of this also driven by the fact that maybe the worm turning as well. We saw yet another squeeze that really wasn't. We saw it with silver earlier, and so everyone's tried to replicate that GameStop phenomenon and a bunch of other names with mixed results, and it seems like the cannabis sector was the latest attempt to do that and kind of withered on the vine, pun intended, out there, even though I know not grown on vines, but still, the metaphor is apt. All right, let's go around the horn and see what everyone's cooking up, because he's not crazy. Let's start with him. Mr. Uncle Mike, sir, what is lighting up your tape on this day that was looking maybe kind of Uncle Mike-ish, now maybe not so much, sir?
Well, I mean, it's a relatively flat day. I mean, the thing that just we always need to realize is that since the S&P has gone to 3,000, then what used to feel like kind of a 10-point day back in the S&P was like 1,000. It's now really you need 30 points to make that move. And now it's even becoming less and less from the standpoint that the S&P is down 11 points on the day, but it's really only down 1/3%. So it's one thing to where just from the years of trading that I can remember when I first started, like 10 points. Oh, wow, that's a huge move. But now it's like, well, it's like 2 points back in the old days, I got, or 3 points back in a few years ago. And I know Andrew can probably attest to that even further back than me, quite honestly. So with that, it's down roughly 1/3%. And so 3,900 seems to be kind of a magnet number for the S&P lately, in that it can't quite get through it, but it doesn't really want to go too far below it at this point. So that's one thing with which I'm looking at. Commodities are not moving a lot either, in that silver is up slightly on the week, but it's really not up that much. And bonds have been relatively stable as well. So a lot of things we've had some, it's been kind of one of those days to where you look at the market, its intraday movement. And if you look at what happened yesterday, we actually had a near 50-point range throughout the day yesterday. But it was, as I've put it before, kind of an exciting road to nowhere, in that we really didn't move that much start to finish if you're just looking at the open and the close. But if you look intraday, we moved quite a bit. So a lot happening throughout the day. It feels like the market's getting ready to do something. It just doesn't quite know what it wants to do yet. Something that I'm looking at is that I'm looking to see if we can make a run at 4,000. A lot of times when markets get close to a key number like this in the S&P, then when they're this close, they do tend to make a run at it. But we'll see what happens for right now. But the main thing with which I'm watching right now is that you're in a bull market when the market's off 0.33% and you're still within 20 points of an all-time high in the S&P 500 approximately. And it looks like there's a lot of red on the screen. It just kind of feels like, oh my, we're down right now. But I think that just kind of shows the overall bull market with which we are in right now. So that's what's lighting up my tape.
Yeah, if it's a day that ends in Y and there's any trace of red on the screen, you're right. It feels like there's just blood in the water everywhere. We're not used to this out here after this protracted. If it's a day that ends in Y, chances are more than 50-50 that it's going to end in green. So to see any red out there, you're right. It may distress the permabulls out there like the Uncle Mikes. But when there's red on the screen, we turn to the most dire of New England cynics over there in his palatial Maine fortress, Mr. Rock Lobster, sir. Some vol creeping back in this week. So that 21 strike, I saw you tweeting about it again. Or when I saw it get down there, I was like, oh, the Rock Lobster, he's looking at this one pretty hard. And yeah, VIX decided once again to bounce hard off that 21 strike. So what are your thoughts on, once again, VIX flummoxing you, as well as what else was lighting up your tape out there this week, sir?
So I guess the simplest thing I could say is I paid a dime for some of the 21 puts last week, and I have so much confidence in them that I sold half of them at 20 cents. That tells you everything you need to know about what I think about the 21 handle in VIX. I do have some left, but for the most part, I don't think they have a shot in hell to do anything. What I am noticing is do you recall last August when we had that SoftBank vol upside apocalypse, or I think we have a call the gamma squeeze. I don't know what they called it.
I briefly recall such a thing, sir.
Yes, right. And so if you look at the vol premium, then, if you think about it, like how does the VIX set up? Like those curves are, indication of volatility in the back, but also, the lower the vol gets in the front relative to the back, the forward vol numbers get out of whack. They get really high, like the futures are right now. And you're like, so basically we're not moving a lot short term, really, except for like what we have. We had we had kind of a duster yesterday for about 5 minutes, which you couldn't close any of your long vol anyway. And then, but I think the reality is like the same thing we've seen. There's continued, let's just call it strategic not selling of puts in the indexes. They're not selling of calls. The upside basically has been taken out, right? Like look at the skews in all of the Q stocks. Upside skew, I was looking at just like calls yesterday. So I just think there's the liquidity providers in vol respond to supply and demand. And like for right now, there's just, the retail is out there, the Robinhood trader, whoever, and it's a powerful force. There's a lot of people buying options. So I think probably that means there might be too much. I think there's too much liquidity and not enough jobs right now. Like if everybody just gets stayed at home and gets paid to, I think there's a little something to that right now about what's going on. But if the public just buys calls, right? The synthetic equivalent, the liquidity provider sells calls, and the synthetic equivalent of that position is a short call long stock, which is a front spread. It's either like a kind of a short straddle or a buy ride or something like that, and the liquidity provider keeps putting these on, and the vol goes up in response. And the vol has not come down yet. So until somebody has more confidence to sell puts, I think bull markets need willing put sellers, to be honest. And this is definitely, the market is going up, and I have no interest in getting in the way of it whatsoever. But you're not seeing that same vol sell. So like I have this vol strategy, and I don't really even have like part of the strategy. And I guess that's why there's another, days with a Y, right? in this business, like you'll see something new every year, and I can admit easily that I've never seen a market all-time high with VIX in the 20s. Right? Like any other year, this would be like, wow, all is really high. But you'd also have the S&P 500 at 2,800 instead of 3,900, with VIX at 22. So that's what it is. If you look at that August September time period, the massive future premium for the October cycle and SEP cycle, we are coming into something very similar. And past performance is no guarantee of future, but it is eerily similar in my view. I think it's the same problem. There's nobody wants to sell this, so the public is buying tons and tons of calls. I got in on it a little myself, except I did it from the put and stock side just so I could have something to trade after hours. But that's what it is. It ain't going away, and it's here to stay. I don't know how long it's going to be here for, but it's. But I mean, we're into it now for a while. The event started in mid-February, and we're now February 11th. I think we're about a year into it, if I'm not mistaken, and it hasn't changed yet. So as far as the 21 puts, I stopped donating the money I make on just being long to the 21 strike in the puts, and until something changes vis-a-vis COVID, I think we're going to be stuck in this cycle for a while longer. Now, as I say this, probably it all goes away tomorrow, but at least from a vol point of view, it doesn't look like it.
Yeah, it is kind of scary that we are closing in on the 1 year anniversary. It's around February 20th of last year. We had shocks to the system before that, but that's where the worm really turned. Listeners, everyone started saying, wait a minute, this is perhaps a lot worse than anyone anticipated. So yeah, we're closing in on that inauspicious anniversary. Also, as we're closing in on that, and like I said, the worm is turning ever so slightly, but there is some paper going up out there in the land of options. Let's see if we can find it, shall we? Let's start off in VIX land, which is doing some numbers right now, listeners. As of a few minutes ago, 576,000 contracts on the tape out there in good old VIX land. That means the ADV of 638, it's right at the cusp of that already, which is, I think the technical term is crazy town out there. I'm going to pull it up really quickly and see if I could see what it's actually 580,000 right now. See what some of the big 822 puts going up for size 45,000 times out there. It was a big spread. Looks like an 822 put spread went up 30 by 45,000 times. Looks like it went up again. So that's attributing to a lot of that out there, but still a lot of paper on the tape here in VIXland. More than I thought. SPY at about 2.25 million contracts. The ADV 4.05 million. The S a little bit north of 500,000, about 555,000 contracts on the tape. The ADV 1.2 million. The Qs 523,000. The ADV 975,000, and IWM 450,000. The ADV 748 out there. Let's move on out to the most actives, the single names, the stuff that you folks are trading when you're not out there slinging the crazy indices. And you'll see for yourself, there's some craziness afoot out here in the single names, listeners. Number 10, though, is a normal name. We talk about this usually. This is AMD, struggling to hold on to the top 10 spot today at exactly 250,000 contracts. Number 9, BABA, 291. Number 8, NVIDIA, lurking up there again with all this crypto madness and everything else going on in their neck of the woods. 297,000 contracts on the tape. Number 7, Uber, 335. Number 7, we're already north of 300,000. Number 6, NEO, still clinging in the top 10, 345 on the tape out there. Number 5, DNN. This is this is a good one. This is a Dennis in mind. We'll be coming back to this one, so stay tuned for that, listeners. It was 420,000 contracts on the tape out there, and this name that I'm wagering most of you never heard of before today. Number 4, good old Tilray, the aforementioned squeeze that perhaps wasn't. It's good for close your ears if you're of the religious persuasion. 666,000 contracts on the tape. Tilray is off 38% today, or about 24 and a quarter handles at 39.63. This is part of that whole crazy squeeze madness going on out there. Number 2, yes, I said number 2, Apple, and number one, 721,000, and the number one with a bullet, going back to squeeze land, Sundial. Yes, trumping Apple and Tesla, more than both of them combined today, is Sundial. 2.17 million contracts on the tape. This has been a interesting one to watch the last few days. A few days ago, just on the 9th, it was trading $1.64. Then it began as Meatball calls it, a McSqueezerstein. Started trading north of $2 on the 10th. Then it ticked all the way up to nearly $4, $3.95. Just this morning, looks like, by about 9:30, before it gave up all of the ghost, well, a good chunk of the ghost, at about 288 or so right now. So it's given up a lot of that ghost, off more than $1 from its highs. So a lot of volume, a lot of volatility for an otherwise sleepy name out here. It's also good for 2.17 million contracts. I hope the Viceroy is not listening, so he would be deeply offended, people trading so many contracts on a sub $3 name out there. But that's what we got topping our list out here this week. Let's look really quick for the list of earnings action, see what's lighting it up out here this week. We got some names. Popping off. We got the move results report hot off the presses from our friends over there at ORATS. Check it out for yourselves. TheOptionsInsider.com is the place to go. Let's go. Let's see what we got here. Before the bell today, we had Kraft Heinz. Remember, they were infamous a few years ago for that, some thought, insider options trading scandal. Let's see what's lighting it up out there today. They were at $33.89 going into their announcement. They were pricing in 4.6%. They delivered 5.5% in terms of vol. So a little bit of outperformance there, bucking the trend out there in earnings land. Looking to see any other names there here. Most of these other names are smaller ones. Let's look ahead a little bit instead. Actually, I take that back. We do have results reports for, Zynga. Zynga's on here. Let's go to Zynga. We were just talking about them a few times here in the odd block on recent shows. They were at 11.16 going into their announcement. They were pricing in 8.9%, fairly rich, and they delivered 4% right there. So let's see where Zynga is hanging out right now. You're talking almost $12, $11.95 or so. So good run for them today, up 78 cents. So a good run for them. And let's see, that puts them still north. So actually, if you factor that move in, so again, it all depends on your frame of reference here, listeners. If you factor that move in, looks like it came closer to actually coming in line with that straddle. So wait a little bit, and it worked out for you out there. PepsiCo, 137.75 going into their announcement. They were pricing in 2.1%, and they delivered an impressively poor 1.1%. It's nothing going on in PepsiCo apparently out there these days. We had Uber this week as well. Let's see, they were on the 10th. They were at 63.18 going into their announcement. They priced in, get this, 7.5%. And they delivered 0.5%. So underperforming their earnings straddle by a whopping 94%. Listeners, and Uber, a name that used to be synonymous with volatility out there. These days, not so much. We'll see where the stock is hanging out right now. 62 and change, so about $1 shy of where that is out there, but still nowhere near close to that 7.5% straddle that they were pricing in. Wow. So once again, we see some underperformance from a vol perspective. The first 2 weeks of the season so far, pretty blood red, 54% each. Getting a little bit closer to even money. We got 89 and 94% in the latter weeks. Let's see. Those are going to be revised as more numbers come in. So we'll see if that holds true. I have a feeling they won't. I have a feeling they'll be revised down. And popping off after the bell today, we got a big one. We got Diz. They were at 189.63 as of this report, which was coming in right before the show this morning. They were pricing in pretty much exactly $10, 10.01. And in the past, they moved about $5. So pretty easy math there. 2x on their straddle. That is interesting. Disney, I've been talking about them. They've had quite the stellar year. They were around 100, actually shy of it. So they've effectively doubled since the lows of last year, off what otherwise would have been viewed by most on the outside a pretty horrible year for them. Most of their major business lines were curtailed or shut down entirely. All they had was Disney Plus and a couple of parks. And ABC was, I guess, doing all right. But, ESPN was not. And the cruise line's not existent. You can go on and on with all their various, never a single Marvel movie or any big movie released from them throughout the entirety of the year, pretty much. So a lot of their major business lines were fallow in the year of 2020. And yet the stock up pretty much doubling from the lows. So there's a lot of juice priced in. It's a pretty lofty valuation. That's being reflected right now in this earnings chart. It's going to be an interesting one to watch here. Are you watching Diz? Are you trading some of this juicy juice out here? Let us know here, listeners. Let's see. Well, speaking of what you guys are up to, really quickly before we get into the odd block and unleash our Eye of Sauron, let's look really quickly. I like to check in from time to time. I usually do this earlier in the year. We just got distracted, as you might imagine, with the whole rating of the Capitol and then other things like GameStop distracting. We like to check in at the beginning and middle of the year with what the trends data is telling us for options interest and sentiment and a bunch of other fun trading-oriented terms. We did this a few weeks ago. We just haven't had a chance to break it down yet on the show. But coming into, as I said, a couple of weeks ago, so mid-January is when we really ran this, just basic options interest was still very strong. You know how Google Trends ranks it. 100 is the apex. And they go back a year pretty much. So over the past year, 100 would be the strongest part, the highest part. We hit that peak a couple of times. You can probably guess when we hit that 100 level last year. But coming into mid to late January this year, it was still pretty strong at about 92% of that 100. So people were still fairly firmly interested in options. If you were wondering where that interest was coming from, no, it's not Maine. Number 5 was Oregon, 4 Colorado, 3 D.C., the District of Columbia. They always keep popping up there, which is kind of interesting. Number 2, Minnesota. And number 1, Washington. I'm assuming that's Washington State. So interesting stuff there. If we narrow it down a little bit further, let's get to options trading. You know, the options search term by itself, that could imply many different things. That's a little bit lower. That peaked last year around 100, obviously, in the June timeframe, actually. That June was higher than March. So the June 7th to 13th, that week was the 100, the apex of the Google Trends data. March topped out comparatively at about an 83. So that shows how much higher the options trading interest was in June, even than in March, which is surprising. It hit its low of about a 31 on the first week of November 1st through 7th, which is kind of interesting because a big event was happening during that time last year, and yet options trading interest was at its low. And coming into that portion of mid to late January when we ran the numbers, it was at about a 61%. So about 20 odd points below where it was in March, but pretty much double what it was in November. So interesting how all that works out there. And if you're wondering where the top regions are for options trading interest in the U.S., California, it's a big region. Number 5, Delaware. Number 4, again, this is per capita, which is why some of these smaller names and areas can pop in there. Number 3, New York. Number 4, number 2, New Jersey. Number 1, D.C. again. D.C. keeps popping up. And if you're wondering what other queries people search for when they search for options trading, number 1 was trading futures versus options, which is kind of interesting. Probably not what I would have expected. Number 2 is binary options trading strategies. Number 3, how to get approved for options trading at TD Ameritrade. Spoiler alert, it's not that hard. Number 4, the best platform for options trading. That makes sense. And number 5, the best stocks for options trading. We can get into more about volatility and all that fun stuff. Maybe we'll save that for vol views because now it is time to unleash the Eye of Sauron. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, welcome to the Odd Block, the portion of the show where we unleash our Eye of Sauron upon the options markets and see what it comes back with. Sometimes you guys have been sending us your own Eye of Sauron ideas, which is always fun. I like to see that branding is getting out there a little bit. Not too much. Don't want the Tolkien estate coming back at us. Just enough to be fun. Before we go, Mr. Rock Lobster, are you heartbroken that yet again Maine has been knocked ever so ruthlessly from the top of the per capita options trading and options search categories yet again, sir?
It is a little hurtful, I have to admit. But I think we do better once the summertime rolls around. When the summer people come back, and really realistically, they're the ones with all the bucks anyway, because did you know Maine had more second homes? There are more second homes in Maine where people actually don't live in them than any other state in the union.
So you're saying more people don't want to spend their time in Maine than any other state? That's what you're saying?
Only in the summer.
Come to Maine. Nobody else wants to be here. Come to Maine. That should be their slogan. I like it. Well, hey, when no one else is there, you guys are busy slinging options. But we got to get to this one Mr. Rock Lobster. You don't need an Eye of Sauron. You could even just look at it through one of those old pinhole cameras used to make back in like 6th grade or whatever. You can look through it through your hands. You can still see it. It's this madness that is Denison Mines. Remember, I talked about this earlier. Listen, this one came up. I immediately thought, okay, this has to be a div play or something, but it is not. It's just, if it is a div play, you put it that way, they're doing it wrong. But man, I think the technical term is damn. Damn, Denison Mines. Denison Mines, if you're wondering, listeners. Ticker symbol DNN. Again, you probably never heard of this name before today. Trading a whopping $1.06. A year ago, it was trading 36 cents. Got down in the Great Nadir to about 19 cents. Then it kind of bounced around 45 cents, not that long again, then 37. So it bounced around in the sub 50 cent range for most of the year until December when it broke 50 cents. And then it rallied out, all the way up to this January, about 77 cents. Had a good run. Then it gave a lot of it back. By the 27th, it was trading 64 cents again. And now it has turned right around and trading back up to over $1.06 as of right now. That's interesting in and of itself, but we're here for the options. And again, our Eye of Sauron came back to us and just said, damn, because that's pretty much what was going on out here, listeners. We first noticed 14,000 of the March 2.5 calls going up for a good old 25 cents. The market was 25 cents at 30. Seems like they had parked a bid there, and it seems like more perhaps had gone up. So we instructed our Eye of Sauron, do a little bit more digging. And then it found another 7,368 going up for 25 cents. They went up an hour and change earlier. That's when they were offered at 25 cents, 20 at 25. And then 1,524 going up for 0.143 cents. That's the earliest print we could find. That was at 9.54. By the way, if you're wondering, that was IV was 325%. The later IVs were 366%. So that vol ticked up quite a bit. The earlier print, by the way, the stock was at 97 cents when they started going up. So it's been driven up all the way north of $1. And then we started doing a little more and decided, oh, wait, let's just look at the numbers. And yeah, 213,000 of these things had traded. That was before the start of the show. So let's see now if that number has increased at all. I'm going to wager probably yes. Let's see. Where are we? Yes. It's now a total of 277,000 of these March 2.5 calls. Yes, 2.5 calls, listeners. So the stock has to more than double for these calls to even become relevant. And it has to happen within about a month and change, a month and a week. It's going out on the 19th of March. This is just madness here, Mr. Rock Lobster. Any way you can cut it. Close it in on 300,000. We crunched the numbers earlier today, just on the 213,000 and change. Again, this was a crazy one. This makes you hope. We hope this guy is overriding these. But the early prints don't make me think that he was. Like I said, the early print, they were 10 cents at 15. This person came in and took off 1,500 and change at 14.3 cents. And again, the vol was much lower there as well. The vol was, 40 odd points lower. The vol started ticking up. We started lifting offers. And next thing you know, they're trading 14,000 lots at almost a 370 volatility out here. So if they are indeed buying these calls, again, hope Viceroy is not listening because it is an absurd outlay. This before the show, that would have been about $5.3 million worth of outlay, which, we always like to talk the options here. But there are times when the stock is preferable. And with that same $5.3 million, you could have bought almost 5 million shares of the stock, about 4.7 million shares. And then, of course, if you do it on margin, could have bought a lot more. And it wouldn't be going away next month either. You'd have that stock for whatever it's worth. This case, it's worth $1. Another 60 odd thousand have traded since then. I'm going to hope this guy is overriding these. I hope this is the mother of all overwrites, and he's taking in that 360 odd vol, and he's taking in, that $5.3 million. And he's happy to dump this thing at 2.5, which I think most people would be right now. This one is, the technical term is insane. Pick your adjective, throw it in there. Nutso, complete insanity. This has to rank. We've done this for a while now. This has to rate as one of the crazier ones we have seen of this. Do you agree, Mr. Rock Lobster?
I always love saying this, that when I started trading, a busy day was 100,000 contracts for the whole PSE floor, and 277,000 contracts in one stupid stock. It still boggles my mind, the growth of the business. However, I got to say here, dude, vol's up 60 points. So what do you do with this? I can only assume that there's a buyer somewhere, and as a lot of and the blocks are pretty sizable, right? So I look at this, and and a lot of big paper is matched ahead of time. Like the floor business, the retail brokerage business, like the high-end retail brokerage business, these guys know where their stock owners are. And when somebody wants to buy a bunch of calls, they go find somebody that owns a lot of stock to write calls. I mean, that's been the option business probably since it was inception, even when it was over the counter before it was listed. So, and I look at this and I'm seeing all these trading in a quarter, and I can only assume that somebody took the vol bid and sold it. I'm not quite sure exactly, but I mean, vol is still up. I mean, as well as I do, 200,000 contracts trade, vol is up 60 or 70 points. It's most likely a buyer. I mean, that's leading the vol charges as best I can tell. So but they're offered at a quarter now, sort of all you want. They started trading at smaller prices and then got bigger, but I think somebody is holding the line at 2.5 at 25 cents right now, as far as I can tell. So, you take that and you, but I think initially there's a pretty good sized buyer, and now that's it's all you can eat at 25 cents.
Yeah, this guy or gal obviously sparked a feeding frenzy. This strike at this price. A lot of big market making firms, others stepped in and said, "Yeah, I'm there. I'm at 25. What do you want to do? Sell a 370 vol nearly, buy the stock for around $1. There's a lot you could do between $1 and 2.5 to hedge that." So I think a lot of firms are stepping in to say, "Hey, we'll be there if you need more. Hey, I'm there right now." Maybe they missed the early kind. They want to get it out there. Either way, listeners, you too, if you want to buy them at 25 cents, sounds like they're offered there. I would recommend probably against it, but hey, maybe you want to go crazy out there. Maybe you don't like listening to the show. You want to throw away money. Then by all means, either way, yeah, I think we're going to be coming back to watch this one, Mr. Rock. This is impossible to ignore. This is going to be in the to be watched category. We've got someone chiming in here on the live chat. Who is this? Mr. Unlimited says, over under, it'll be at 300,000 by the end of the show. Well, at this clip, it's on pace for that. Definitely. I'm going to say under, but just ever so slightly. Because, yeah, this thing is obviously, maybe this initial trade just kicked off. It's the catalyst. It's kind of hard to talk about other trades now after that, because that one just sucks up all the oxygen. I mean, the other thing we found that was interesting was a 4,000 lot in Quotatio. Doesn't seem quite as exciting by comparison. This is ticker symbol QTT, so we'll do this one quickly. By the way, if you're wondering, Kututiao. Say that 5 times fast. It's a Chinese mobile content aggregator. Stock's at 536. This is obviously an ADR. Let's just look really quickly. Over the year, this one was trading about where it is right now, a little bit north of it, 577 a year ago, sold off to $1.53 in the Great Nadir, and then came roaring right back to where it is right now, 536. We profiled, let's see, looks like the March 7.5s. Ooh, 7.5s. Those are optimistic. The stock's 536 right now, listeners. Having a good day today, up $1.11. Nearly 4,000, 3,871 of these going up for $1, lifting the offer on the Philly. This is, if you're wondering, this is a 235. What is going on with people and these absurd vols? 230, ever since GameStop, trading absurd volatilities has become just de rigueur out there. 235.5%. And someone's paying that for these March 7.5. Mr. Rock Lobster, what is your take on these as well? On your favorite name, I dare you to pronounce it, sir.
You know what? This name is perfect for you because how can they take this and stick it in the symbol? You remember sometimes you get a little bit out of whack when the single symbol is so far away from the actual name of the company. So I found this. Somebody must have been listening to you and tried to fit the symbol as close to they could to quote tout to you. Here's the thing. You're buying a 300 vol, but the stock goes up 50%. Are you right or are you wrong? And I think that's where we are right now. Like it's crazyville. I don't ask questions why anymore, why it's crazy. It just is. Again, this flood of paper, liquidity providers are like, okay, let's make the vol high enough. Clearly, I think all this volume, I think they're still doing fine. They operate at just a higher vol. There's no, they're going to make people pay up, and that's kind of what they're doing at this point. So, I think I know the price is crazy, but I'm trading a stock that's moving like 30% a day. So, I mean, even the vol at 200 is underpriced. So okay, I'm just, I shrug my shoulders and just you trade what's in front of you. But do I like this as a trade? Ask me tomorrow if the stock's up 25% today. So, ask me tomorrow and the stock is probably 8.5%. And this looks like the best trade ever. So, the at the money is trading around $1.70. So, anything's reasonable, and these are all relatively small dollars, right? It's a dollar contract. It's not hugely expensive, and that seems to be catching the eye of a lot of people as far as action goes.
Good old Kutatio, I should say the Rock Lobster's favorite new name to add to the list. Yeah, you're right. I mean, I'm not arguing this name per se, this level of vol, just in general, the acceptance that seems to be out there for people to just come in and just, it's 300. Okay, sure. I'll trade it. I'll buy it. It just seems to be calm and normal. I don't know. People's frame of reference is quite as far back as it needs to be to understand just how abnormal that is, trading a 200 plus volatility in any name. Granted, this is not a big major trading name. It is everyone's favorite Kutatio, but still interesting stuff. We got a review here from Spirit Airlines. Looks like we have a lot of questions to get to, though. So let's get to them. It's Thursday. Let's unleash you hordes upon us. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, let's get to it. We have a bunch of epic treatises, but I like you folks in the chat too, so I bump you guys up to the top of the list. Like everyone's favorite, my boy Luigi. He says, this came in when we were talking about the search trends. He said, I am in Washington State. Obviously, I can move markets. So there you go, Luigi. You're the one who's making Washington State the top of the per capita rankings in Google search trends. He says, also, tell the lobster, pshaw to clams, I have geoducks up here. So you know what the hell a geoduck is, Mr. Rock Lobster? And what do you think about his insult to the great product of your state?
Yes, I think they call them gooey ducks. They're the long razor clams that have those really funky long clams. I think anyway. That's because you live in Chicago now. I don't know how you're claiming some kind of seafood knowledge coming from Connecticut. But
yeah, if I got a clam,
gooey duck is that kind of long clam.
If I got a clam from the Chicago River outside the studio here, I don't think it would suit me well to eat it. let's just put it that way. If they're clam pirates out there, I think it's more for their own enjoyment. All right, next up, Mr. Unlimited, also from the live chat, says, today I heard you can trade housing futures like markets. Where can one short and long housing markets? Interesting. This is not, I've heard talk of this, you're right, in the past, and obviously there are a bunch of REITs out there who trade different sectors in different areas, malls or whatever types of properties you like in different areas. Housing futures, though, that's a different beast. You're not really getting a lot of this stuff over there on, let's say, a CME. We'll be doing TWIFO in a little bit, so we'll dig into some of their offerings. But they have things like lumber and things that are related to the housing market. But to my mind, unless it is deeply illiquid and buried there in Globex, there is no housing future on a platform like CME. I don't know, Mr. Rock Lobster, or perhaps Uncle Mike, are you familiar with where Mr. Unlimited can go to, as he puts it, trade housing futures like markets?
Well, real estate's such a specialized area with which to invest, and that the real estate market in Maine is obviously going to be much different than the real estate market in Utah and Chicago and Dallas. So I think that to me, it's tough to nationalize real estate. Now, I know if interest rates go down, a lot of times that's good for real estate markets nationwide. And there's things that can happen that do that. But typically, I personally view real estate as more of a localized investment. So I don't know if it would be difficult to do from a national standpoint.
You have to create some sort of baskets and then create an index that tracks off that basket and then have a future that links to that index. And I know, there's no liquid product that you could maybe get some OTC, and maybe there's some REITs out there that claim to do this. I'd be skeptical there, Mr. Unlimited, of anything out there. The liquidity is probably not going to be that great. And how representative really is any sort of regional housing basket? Obviously there's different pockets of different areas that are doing better than others. So yeah, if you know exactly what you're talking, if you can send us a link to exactly what you found, we'll take a look at it. But to my knowledge, there's nothing out there that's deep and liquid and listed that are futures, let alone have options on said futures. All right, we got some epic ones here. We have to settle a bet here, gentlemen. This person who writes in, by the way, he calls himself the uncle of the rockiest of meatballs. So there you go. Maybe it's the meatball's uncle. He says, or maybe it's the rock lobster's uncle and also the meatball. I don't know. We'll find out. He says, "Hi, Mark. Please help me settle a bet. A friend and I were discussing the world of options on a fine Friday evening." He puts in parentheses, "as all adventure-loving 30-year-olds do on a Friday night." We're in a pandemic now here, uncle of the rockiest of meatballs. So, the frame of reference for what's exciting to do has changed a little bit. He says, "And I have tasked myself with arming him with some knowledge regarding options. We started discussing the, quote, wheel strategy." Uh-oh, Uncle Mike, right in your wheelhouse, pun intended. And he said, "and how it is a great way to reduce your cost basis in a security over time. Long story short, we got into a little bit of a debate on what the, quote, right thing to do would be given a certain scenario. Imagine you purchase a security and it immediately dropped 30% after you bought it, and have now decided to implement the wheel strategy. So you sell a call that expired worthless and are now ready to sell another call further out in time. The question we ran into was, quote, is it better to continue to reduce your basis and try to get out of that security as quickly as possible?" He puts in parentheses, "assuming you want out, or should you allocate your capital elsewhere rather than trying to reduce cost basis on your first trade? I'm aware that there are many factors that play into this, so I apologize for the lengthy email novel. I try to think through all the options, pardon the pun, he's full of puns here, different scenarios, but for me, I felt like it would be better to sell puts/calls on the first security to try to work yourself out of the position and then go out and start the wheel on a different security. Thank you and everyone else for all the great information/content you provide." Well, you're welcome for that, uncle of the rockiest of meatballs. You get the award for the handle of the day out there. Certainly. There's a lot to go on here. The wheel, the way we usually talk about it, I know the way Uncle Mike likes to do it, it starts off with selling the put to get in. You mentioned kind of just buying the security. So you're kind of missing the first leg of the wheel, and a very important one usually too, because that's going to get you a nice attractive level to buy the stock or a little bit of additional income. If you're missing that first leg, you're kind of missing a core component of the wheel. But before I go on, listen to Uncle Mike chime in, because he's our resident wheeler, aka the triple incomer out there. Mr. Uncle Mike, what do you have to say here for the uncle? Or actually, uncle, I just missed it. He threw you in there as well, Uncle Mike. You're in there as well. He got all of you in there. How nice is he? To the uncle of the rockiest of meatballs, what do you have to say for him here, Uncle Mike?
Well, first off, thank you, because he put me in there first as the uncle, is the first thing that he said.
That is true.
Paul's uncle. He said the uncle of the Rocky Meatballs. So, how can I not love this guy? So this is how we do it. In that step one, we do like to sell a put to get into a stock, because we like to just, that way we know if we do get into it, we will be buying it on a dip. We mathematically have to be. But the question that I want to focus on is, what if it goes down 30% after you get into it? So let's say we sold the put, we got the stock put to us, and now we own the stock, and then maybe we sold a covered call and the stock goes down 30%. So I buy my call back for a nickel or a penny or whatever. And so now I'm in this stock that's gone down all this way, and it's a stock that I still want to own. Well, what we do in the triple income, it's kind of a mix between buy and hold and shorter term trading, in that a lot of stocks did that in a year ago when the markets crashed as they did. And so when that happened, we really had to make up our minds in a lot of ways, because sometimes we sell covered calls, sometimes we sell call spreads against stocks. But if it's a stock that you still want to own and the stock goes down 20, 30%, because of something weird, not necessarily because there's a fundamental flaw in the stock, because of something weird. And I would say that last spring would definitely qualify as something weird, and just going down for that reason, then I like to sell a call spread in that one, no question about it. Because if the stock is down that much and you still like it, why would you not give yourself a chance to have the stock come back? Now, on the flip side, stock might stay there and you want to keep with your objective of selling premium on the stocks. But I really like selling call spreads if it's a stock I still want to own and it is decreased in value and I'm at a loss on the stock. So I think that has been, that stock really made our whole triple income portfolio, or that strategy really made our whole portfolio last year. And so that's the way with which we like to do it when we run into that situation.
Anything to add on this, Mr. Rock Lobster? Otherwise, we'll get to this next, try to squeeze in this next epic one from Jeff here.
Like I would say, if you're a buy rider, there's two things. Remember, once you write a call against your stock, it's synthetically a short put, so that's all the money you're going to make on that cycle. A stock down 30%, that sounds like a pretty speculative type stock, which I don't think is a great buy right candidate, to be honest. I think, if you're going to speculate, spend a couple $100 on a call. Don't go all in on the stock. So, yeah, but overall, I think the wheel strategy is a good strategy, but that's why I think Mike starts with the short put out of the money. I think you might as well give yourself the 10 or 20% head start riding the put that it affords you when the vol's this high. So Mike does that very well. So I defer to him on this, but you don't want to. I don't think buy riding like high vol stocks, even though it looks super juicy and easy, sometimes there's a reason the vol is so high. Again, depending on where your market conditions or something like that, but like one-off stocks where with super high vol like that buy ride looks juicy, but sometimes it can be a lot more dangerous than you think.
Yeah, if you're doing the wheel, you got to start off. The first leg of the wheel is selling the put. If you're just buying the stock, it's just a covered call then. You're not doing the wheel. So make sure you're doing that first. That'll help you obviously identify the attractive level where you want to buy it. Obviously, hopefully you get you a little bit of income along the way. So that's the first leg. If you're not doing that, you're not really doing the wheel. So yeah, let us know what you guys decide over there with your great bet there. Uncle of the Rockiest Meatballs. I like that handle. You win for handle of the week there, Uncle. All right. The question before, Revon and others were chiming in saying they sent links here to these Boston real estate futures, Chicago real estate, Denver. So these things exist. I've never heard of these. I've never seen these. They obviously aren't listed on a major venue like CME. So this is good. I'll dig into these. Everyone who sent these out there, Mr. Unlimited and others. Like I said, I don't know anything about these. I don't know what they're trading, what they're doing. It looks like some guy is just tweeting about these. But if they're liquid and they trade somewhere we've actually heard of, we'll let you know. It's interesting. It's certainly an interesting concept. But again, we like to talk about liquid stuff here. You guys can actually trade. I'm not sure about these. We'll have to check. But good find. That's why I love you guys. You guys are out there just pulling things left and right and center out here. All right. Speaking of love, we got I'll have to save this epic treatise about put exercise from Jeff for another day. That would take almost 2 shows to answer in and of itself. We'll end on this quick one for now here from Cinemat. Remember, if you guys want more in your ear holes, we're coming back pretty quick with TWIFO. I'm going to talk about a lot of good stuff. And hey, this launched ETH futures. How crazy is that? Going to get into all that crazy small cap ball and everything else going on in TWIFO in a little bit. But let's round out our mail block segment for this week here with a little bit of love. These are crazy times. We like to end with a little bit of love. This one, also coming from our live chats, comes from Cinemat. He says, love the show, guys. Listener since June. Thanks for all the knowledge bombs. Well, thanks for listening. Thanks for joining our party. Better late than never. A decade or so almost in. But we know a lot of you joined last year as well. We welcome all of you out there. You guys are the reason that we do this. Remember, if you like what you hear, keep rating and reviewing it wherever you get the show. It does help new folks like Matt and everybody else keep discovering the network out there. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Yeah, we also got images sent here. What a geoduck actually is. It looks horrific. My boy Luigi, I would not want to eat that. I can't describe what it looks like here on this family-friendly program. Instead, let's keep rolling around here as we go into our final segment. It is time to go around the block. Still have some big earnings popping off later today. I talked about that earlier in the show, but obviously a lot to watch here from an overall markets and volatility perspective as well. You know, as we talked, maybe we talked it up a little. Maybe Uncle Mike turned the worm yet again because NASDAQ is now green on the day. S&P and Dow less red over there. So we'll see. Perhaps the worm is turning yet again here over there. So all you perma bulls talking up. VIX still hovering around a 22 handle. So not quite back at the, shall we say, 21 level that has mocked the rock lobster for, pretty much the entirety of his trading life. That still puts it off about a point from where it was at the start of the show. So maybe saner heads are prevalent out there. Speaking of sane heads, they don't get much saner than the uncleest of the rockiest of meatballs, or whatever he called himself in his handle. I like that handle. Mr. Uncle Mike, sir, what are you watching for the rest of this week until we can gather?
I'm, in addition to the earnings, as well as the 4,000 and 3,900 levels I talked about earlier, I'm just also watching the 10-year note, and the yields are a little bit higher again, and not a ton, but seeing if with the pullback and just the bond price itself, seeing if we can get some more buyers in that, as well as everything I discussed earlier.
All right. And Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on? And what is your alter ego, Volman, keeping an eye on? Maybe the 21 handle starting to come back into the vision again, sir.
It's, like, so I'm sitting on like this VXX strangle. It's like I'm laughing at it. I just want the VX. Okay, just break up. Like, okay, I'm going to try to place a stop above $1, and like it trades like $1 for 3 seconds and drops back again. Yeah, I'll just say the vol market is just dead to trade unless you're like future trading the VIX future spreads or something. just not a fun option trade at this point. So I can admit when I'm getting my my kneecaps kicked in. Yes, the 21 handle is for now. It is a bridge too far in VIX for reasons I described. Unless something changes, it could always change. Miraculous. I think it's very COVID related. I think it's people getting back to work, people feeling a little normal, and maybe the Fed and Congress not sloshing so many dollars into these upside calls. Until that changes. So watching that, we don't really have a lot of earnings going on. I do find the only other thing too is it's a little interesting is oil. Crude about back to where it was pre-pandemic level. A lot of the crude stocks not. So I think there's some interesting things there. And just again, in a lot of those industries that COVID forgot, I think there's some opportunity there still though, and see if those move. But as far as like big tech and the Qs, it's like, geez Louise, like how high can they go? It's hard to get on board at this point.
It's not hard to get on board with more content from the network. Remember, if you're listening live, just stay tuned. We'll pump some fun stuff into the live chat, including we got Brian doing OPR and a bunch of other good stuff. I'll be back in exactly half an hour. Talk TWIFO, all the stuff Rock Lobster was just talking about. Energy vol, small cap vol, crypto, you name it. Going to break it down on TWIFO coming up in exactly half an hour. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters. He was just talking. Mr. Rock Lobster, sir. Or should I call you the uncle of the rockiest of lobsters? Meatball. Rockiest of meatballs. Even I screwed it up. If folks want to check out all the stuff you guys have cooking in the land of the pit, where should they go? What should they do?
You want to learn how to trade volatility? Come to Option Pit. We got the Vol Edge. We got Sharp Bets. We got Little John, or actually it's Robinhood Trader now. We got my Vol Trade Club. We don't have fancy hats yet, but hopefully we'll get them one of these days. And if you want to learn to be a pro trader, trade in all conditions, we can do that too. We're probably the only service that's actually sent a trader back to the trading floor as professional. So if you want to put your trading hat on and learn how to do it right, come on over to Option Pit and we'll get you started.
There you go. OptionPit.com is the place to go. And Uncle Mike, if they want someone to hold their hands during these crazy times, where should they go? What should they do?
going to make the times even crazier because I've finally got compliance approval on this after years and years and years, and I am making my big announcement right now. I actually have a Twitter handle at Mike TOSAW.
No way. No way. I'm going to look for it right now. I don't believe you.
So someone go out there and be my first follower. You have the opportunity to be my first ever Twitter follower.
Bam. I just did it. We just followed you that fast. That's how good we are.
All right, Mark's my first, and so you have a chance to be the second. And so with that, I will be having content. I will be doing expansions on the strategy block. I will be having all sorts of stuff that I'm going to be putting out there now that I'm legal to do so now. So at Mike TOSAW, check me out. There
you go. Don't have to use hashtag Uncle Mike anymore. At Mike TOSAW, give him a follow. This is indeed a momentous occasion. I think I'm definitely in the first two. Some jerk named Jeffrey Weber may have beat me, so I hate that guy. I don't know who he is. But either way, give Uncle Mike a follow. Get him up from 2 over there on the old Twitters. And, of course, you can keep following us at Options. All sorts of good stuff coming down the pike to you guys, including Twyfo in a little bit. And, of course, Vol Views tomorrow, noon Central, 1 p.m. Eastern, to talk all the fun that is volatility. Then we're back again on Monday with another episode of the Option Block.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.